Hello everyone. Thanks for taking the time to join us today. We're thrilled to have you here and excited to dive into some valuable information with you. For those who don't know us yet, we are Texas Tax Group. We specialize in helping businesses, particularly in the oil and gas sector, find and secure tax refunds and credits. Our team includes industry veterans who bring over a century of experience in oil and gas taxation. Our goal is simple: to help you uncover hidden savings and boost your bottom line. Today we want to show you how your oil and gas company can avoid leaving money on the table by not claiming available tax refunds. Here's what we'll be covering today: an overview of tax refund opportunities, a detailed look at our consulting process, success stories from our clients, and finally, some closing thoughts and next steps. All right, let's get started and see how much money your business might be missing out on. Let's begin by exploring some common tax credits and refund opportunities available to oil and gas companies. With over a century of combined experience in this area, we've seen firsthand the significant tax savings that are possible when these rules are applied correctly. Starting with construction at the lease site, one of the fundamental areas where companies can benefit is through the designation of new construction. The labor involved in the construction of roads or drill pads at these sites is generally non-taxable. Additionally, certain materials, such as non-processed caliche, may also be exempt from tax. It's critical to review the materials you're utilizing to ensure you're taking full advantage of this exemption. Moving to drilling, we've advised countless clients that the labor involved in this process is consistently non-taxable. When it comes to fracking materials and proppants, things become a bit more nuanced. For instance, while the service provider is considered the consumer, frac sand may qualify for exemption if it remains non-processed. Likewise, water used for fracking is also classified as non-taxable, along with the disposal of produced water. Production equipment such as heater treaters and separators is another key area where companies can secure tax relief, as this equipment is typically exempt from tax. Furthermore, electricity used to transport material extracted from the earth can also fall into the non-taxable category. This particular exemption has made a significant difference for many of our clients. On the other hand, certain items like chemicals used by the service provider will remain taxable, so it's important to account for that in your planning. Regarding construction, there are specific distinctions to be mindful of. For example, flow lines are typically taxable, while gathering lines are often non-taxable. Similarly, the construction of storage tanks exceeding 500 barrels may qualify for a labor exemption, which has saved many of our clients considerable amounts over the years. In our experience, accurately identifying and applying these exemptions isn't just a matter of reducing tax liability. It's about ensuring the long-term financial health of your operations. It's these kinds of distinctions that make a substantial difference on your bottom line, especially in a complex industry like oil and gas. Now, let's consider the broader financial impact of these opportunities and how they can contribute to enhanced profitability.
Hello. Now that we've outlined the specific exemptions and non-taxable items available, let's take a moment to examine the broader financial impact these opportunities can have on your business. Over the years, we've seen companies realize significant tax refunds and savings by properly applying these exemptions. For instance, by recognizing that labor in new construction or drilling is non-taxable, you're directly lowering your operational costs. These savings are particularly impactful in capital-intensive operations like oil and gas, where labor can represent a substantial portion of the overall expense. Similarly, identifying non-taxable materials such as non-processed caliche or water used for fracking can have a marked effect on your bottom line. These exemptions allow you to recapture costs that would otherwise go unnoticed. When you're dealing with millions of dollars in materials and equipment, every exemption, every reduction in taxable transactions has a real and measurable financial benefit. Let's not forget about the production equipment and electricity exemptions. These are often overlooked but can generate substantial refunds. By ensuring that equipment like heater treaters or separators is correctly classified and that electricity used for transportation qualifies as non-taxable, companies can see considerable savings on what would otherwise be recurring taxable expenses. In sum, understanding and applying these tax rules with precision can yield meaningful financial advantages. It's not uncommon for companies we've worked with to see six-figure refunds after a thorough review of their transactions. When you're operating in an industry that often faces slim margins, these refunds and tax credits can make all the difference in maintaining profitability and reinvesting back into your operations. This is why we always emphasize the importance of a proactive approach to tax management. By staying informed and working with seasoned professionals, companies can continue to unlock opportunities for savings that contribute directly to their long-term success. Thank you.
I want to give you a brief overview of how we approach each engagement. We've refined this process to ensure it's not only thorough, but also efficient and tailored to meet the unique needs of each client. Our goal throughout the consulting process is simple: to help you recover overpaid taxes and secure valuable tax credits without disrupting your ongoing operations. From the very first meeting to the final stages of filing refund requests, we are there every step of the way, ensuring clear communication, transparency, and results-driven solutions. The consulting process begins with an introductory meeting, which is a crucial step in setting the stage for a successful partnership. During this meeting, we take the time to thoroughly understand your business, your specific needs, and the challenges you're facing. Whether it's conducted in person or via video conference, this meeting allows us to tailor our approach to your unique situation. We'll discuss your current tax practices, any previous attempts to claim refunds or credits, and identify potential areas where savings might be found. This conversation is vital as it helps us align our efforts with your business goals, ensuring that our work is as effective as possible. After our initial meeting, the next step is to review your electronic records. We understand the importance of security and confidentiality, which is why we use a secure platform like Citrix ShareFile to access your records. We'll guide you through the process of securely uploading your financial documents, such as invoices, tax filings, and any other relevant records. Our team then systematically reviews these documents to identify potential overpayments or overlooked tax credits. This step is efficient and minimally disruptive to your operations, allowing us to quickly pinpoint areas where refunds may be claimed. In some cases, not all records are available electronically, and that's where our physical records review comes in. We'll schedule an on-site visit to review documents that are stored at your facility. Typically, this includes reviewing accounts, purchase orders, and other supporting documents from the last 4 years. Our goal is to conduct this review with minimal disruption to your daily operations. During our visit, we'll scan and copy relevant documents that could qualify for tax refunds or credits, ensuring that no potential savings are overlooked. Based on our preliminary findings, we may develop a series of queries that need further clarification. These queries are a critical part of the process because they ensure that we fully understand the specifics of your operations and the transactions we've identified. We'll work closely with your team to discuss these findings and gather the necessary details to maximize your potential refunds. This collaboration is key to accurately identifying all eligible credits and ensuring that no opportunities are missed. For example, we might find that certain purchases, like water filters used in the production process, are exempt from sales tax. These findings are discussed in detail with you. Once we've gathered all the necessary information, our team compiles the data into detailed refund schedules. These schedules are comprehensive reports that outline the specific refunds or credits we're claiming on your behalf. We'll review these schedules with you, answering any questions you may have, and providing supporting documentation and research to back up our claims. This step ensures that you fully understand the potential savings and are confident in the claims we're making on your behalf. After we finalize the refund schedules, the next step is to file the refund requests with the relevant tax authorities. Whether it's the state comptroller's office or another taxing body, we handle the entire filing process on your behalf. We also provide ongoing support during any audits or reviews that may arise as part of this process. Our team is experienced in working with auditors, providing them with the necessary documentation and explanations to ensure that your claims are approved without issues. Finally, our services don't end with the initial review or filing. We believe in long-term client management, which is why we schedule follow-up reviews every 2 years to ensure that you continue to receive all eligible refunds and credits. This ongoing relationship helps keep your business in compliance with tax laws and ensures that you're consistently maximizing your savings. Our goal is to be a trusted partner in your financial success, providing continuous support and expertise as your business grows and evolves. Let's take a closer look at some real-world examples of how our expertise has translated into tangible financial benefits for our clients. We were approached by a large oil company that had been operating in multiple states for years, paying a significant amount of sales tax on materials and equipment. Their tax team suspected that they had overpaid, but the complexity of the rules made it difficult for them to pinpoint the exact areas where they could recover costs. Through a detailed review and analysis of their transactions, we identified over $1.2 million in refundable taxes. These refunds were largely attributable to exemptions on production equipment and fracking materials, which had been misclassified as taxable. Once the refund was secured, this substantial amount allowed the company to reinvest in new technology and expand their operations. What's more, this recovery was completed without disrupting their day-to-day operations, and the reinvestment significantly improved their drilling and extraction efficiency. A mid-sized gas firm reached out to us with concerns about potential overpayments in severance tax. The firm had been steadily growing, but had not taken full advantage of the severance tax refunds available to them. Our team conducted a thorough audit of their severance tax filings and discovered approximately $800,000 in unclaimed refunds. These refunds were linked to exemptions on the disposal of produced water and misclassified production expenses. The recovered funds were quickly redirected towards enhancing their drilling operations and upgrading to more efficient equipment. As a result, the company saw a noticeable improvement in operational efficiency and was able to reinvest in projects that further drove their growth. For a small oilfield services company, the situation was different, but no less impactful. This company had been investing heavily in innovation, specifically in research and development to improve their service offerings. However, they were unaware of the substantial tax credits available to them under the R&D tax credit program. By working closely with their financial team and reviewing their past expenditures, we were able to help them reclaim $250,000 in R&D tax credits. These funds were instrumental in financing their next phase of innovation and development. For a smaller company, this was a game changer. It allowed them to stay competitive in the market, fund new projects, and retain top talent, things they might not have been able to do otherwise without this tax refund. These examples demonstrate the real, measurable financial impact that tax refunds and exemptions can have, whether you're a large multinational company or a small, locally focused firm. The key takeaway here is that by engaging with experienced tax professionals, companies across the oil and gas industry can unlock significant financial benefits that go beyond what they might initially expect. As these cases show, understanding and applying the right tax strategies not only reduces the financial burden, but also frees up capital for reinvestment and innovation, positioning companies for long-term success in this competitive industry. Imagine the feeling of finding hidden treasure. That's exactly what securing tax refunds feels like for our clients. It's not just about the financial benefits, it's about the lasting impact it has on their businesses. We've witnessed incredible transformations, from struggling startups to thriving enterprises. Let's dive deeper into the amazing results our clients have achieved. Securing these tax refunds has a direct and significant impact on our clients' bottom line, creating a ripple effect across their entire operation. First and foremost, reclaiming overpaid taxes improves cash flow. This is often the most immediate and visible benefit. For companies in the oil and gas industry, where operating costs are high and capital-intensive projects are the norm, improved cash flow is essential. But the impact goes beyond short-term liquidity. By unlocking these refunds, our clients gain financial flexibility, a flexibility that allows them to invest in areas critical to their long-term growth and success. Whether it's upgrading technology to improve efficiency, expanding their workforce to meet increased demand, or taking on new projects that were previously out of reach, these recovered funds make it possible. In many cases, we've seen companies use this additional capital to modernize their infrastructure, resulting in long-term savings and increased operational efficiency. This, in turn, further drives profitability, creating a cycle of sustained growth. Take, for instance, one of our larger clients who reinvested the recovered funds into advanced drilling technology. Not only did this help reduce their operational costs, but it also positioned them to take on more complex projects, increasing their market share. For smaller companies, the reclaimed funds often mean the difference between just staying afloat and actively expanding their business. One client, a mid-sized gas firm, was able to channel their refund into a strategic workforce expansion, bringing in specialists who enhanced their service offerings and ultimately attracted new business. Now, let's talk about competitive advantage. In an industry as dynamic and competitive as oil and gas, reclaiming overpaid taxes can give a company an edge that goes beyond just dollars and cents. When companies can reallocate these recovered funds to strategic initiatives, they position themselves ahead of the competition. For example, some clients have used their tax refunds to invest in innovation, staying ahead of industry trends by developing new methods for extraction or refining processes. Others have expanded their infrastructure, allowing them to take on larger projects or enter new markets that were previously inaccessible. These moves not only drive growth, but also strengthen their position within the industry, making them more resilient to fluctuations in the market. One of the key advantages we've seen is that companies who successfully secure these refunds often experience an uptick in profitability that their competitors might miss. With fewer financial constraints, they are able to be more agile and aggressive in pursuing new opportunities, whether that means adopting the latest technology, expanding their footprint, or launching new projects. For example, a small oilfield services company we worked with reclaimed significant R&D tax credits. This not only allowed them to finance new phases of innovation, but it also enhanced their ability to differentiate themselves from competitors by offering cutting-edge services. In an industry where innovation is key to survival, this gave them a substantial advantage in attracting new clients and retaining existing ones. Ultimately, by optimizing their tax strategy and reclaiming funds that are rightfully theirs, these companies don't just gain a financial windfall, they gain the resources to fuel strategic growth. This positions them to compete more effectively, navigate market challenges, and seize new opportunities that might otherwise have been out of reach. These examples highlight just how important it is to have a robust tax strategy in place, not just to minimize liabilities, but to open the door to new growth opportunities and sustain long-term profitability in an ever-evolving industry. To recap, today, we've discussed the significant tax refund opportunities available to oil and gas companies, our comprehensive consulting process, and real-world success stories. Our goal is to help you uncover hidden savings and maximize your financial benefits. If you're ready to start uncovering potential tax refunds for your business, the next step is simple. Schedule a consultation with our team. We'll review your financials and identify the best opportunities for refunds. Follow the link around this video to schedule your consultation now. Thank you for your time.